Good morning, New York Stock Exchange, 6:03 a.m. Pacific Standard Time, 8/10/2011. The futures have increased in volatility in the morning and after the close. The Dow futures are down 183 handles. Yesterday was a key reversal, but let me tell you about volatility. Man versus machines. NASDAQ futures are taking a big haircut. They're down 40 handles right now. After that big rally, and how bear trends are the best trends to trade in dollar price volatility from off of the low side of the trade when it gets to the high side of the trade and going right back down in the same direction. The S&P futures are down 20 handles. The Dow futures are down 191 right now as I speak. And this is where all the program trading was. And yesterday in pre-market, with the live video analysis, that yesterday was a key reversal off of a bear bottom volatility. And my friends, you better learn how to get a grip, you little smackers out there, is that this is, look at the list. Look at how this gap open down list. 60% of your program trading is done electronically right here in the NYSE as far as the human aspect goes, and that when you are going to put a bear bottom in and a bear bottom trade, a bear bottom trend trade and a bull trend trade are totally different, as you have all learned and will continue to learn. What will happen with the day trader? They can't keep up with it. Ha ha. You know what? If you want to get it right, then get your rear end over here. And how do I trade markets? And how do I trade with, and who is behind the move? And what is behind it? Is it a human? No, it's not. Because they also, in the futures market, as I said yesterday, I got all kinds of different futures, and those robots work on those futures. So on the opening bell, what's going to end up happening is right when that stock hits that support level, on that opening bell in that first 20 minutes, you'll have fireworks going off. Now, this volatility that you're seeing from morning to morning, and I pointed it out yesterday very clear, and I pointed it out yesterday morning, that this morning would be totally different than yesterday, and that is price action futures volatility that makes a fortune, but it only makes a fortune for those who know how to maneuver through it. And it takes very sophisticated training when it comes to these robot machines that are in the market these days versus man. So what we're going to be looking at is that the bottoms were, there was a knife hook bottom reversal. You had an FOMC meeting. It's cleared out of the way. You're getting huge gap downs right now. And the gap open down list is all day long. All day long. Anything above 1.00 ratio and up. Look at the length of it, MMTs, because from day to day and before the opening bell opens in 23 minutes, this is what the trading community has to try to stomach, and they can't. Because that volatility risk management trade has to be applied on a daily basis in the dog days of August. Yeah, I know I sound excited because we're so always excited, so bear with me. And we're excited because we know what we're doing with these machines. And that the stockmarketfunding.com, the SMF platform, has all got it priced mathematically. There is a science and mathematicians behind it. They program in the scripts, and then that's how you get the price action volatility at a much higher level than your normal buy and sell human being. The gap open up list for the NYSE, you have one, Ralph Lauren. That's going to be a short on the opening bell. RL, when that thing makes its high, anything in volatility with its earnings, I'm not saying they did bad on their earnings because they did okay. Higher end retailer, that means the rich are spending money. But this gap here on the NYSE on RL will pay a price. That means that when it hits up there, there's going to be no buyers, and what's going to happen is you're going to have a reversal on Ralph Lauren. That's the only one that we will be looking at shorting, that $10.40 gap open on the NYSE. The gap open down list will be what it is. The left elbow trade from volatility is that what we're looking for to confirm a bear market low is that the left elbow pre-market volatility in the futures is they hit that bottom, but then they're going to come right back in like they did yesterday. But yesterday was a FOMC meeting. Now that that's out of the way, we're going to see exactly how this bear sets this bottom up. And does that bear reversal yesterday, which it was a key reversal yesterday, how do we hold and set that up? And I can tell you, the bear cannot go back to its lows. The bear has to be at a higher low than yesterday's lows, and that on the opening bell, that all these gap open downs get a knife hook entries. They go right back up. The highs could be lower. The thing about outside of yesterday's key reversal is, where is the buyer? Where is the human being? Who believes in it? Put to call ratio says that we're getting imbalanced again, where key reversals in certain kinds of markets start to set up. But let me tell you, just like we were shorting the tops over a month ago, and shorting those tops within the price volatility, the bear lower end of the market has a higher price volatility than the original bull run, where it starts to reverse into a bear. Those volatility ranges are not as high in pre-market as they are in the bear mode. Good luck, MMTs. Left elbow gap down, NYSE, pre-market volatility, pre-market futures increasing, and they only do it when you try to put a low in a market that's extremely oversold. And that the gap down in the morning, the Dow futures are down 231. They just keep getting worse and worse and worse, and the S&Ps are down 25 handles. In pre-market, is there any major news to do that? No. NASDAQ futures on the opening bell are down 46 right now. Now, let me tell you one thing again. In the pre-market, we do it every morning before the stock market opens up. If you're looking for a solution, then you better get over here. What will happen is, the key ingredient in the platform, MMTs, is when you hit that opening bell, that you rip the opposite direction. You put ratio lows in, and the Dow futures are right now at 10,968. 226 handles down, and has been increasing down more. And when markets put in bottom, it's getting that bottom trade down there. They come in and they buy with a knife hook reversal. That's when you know the bear bottom is trying to make a bottom in a market. And the weekly moving averages and all the other things that you are taught come into play. And each time on these big future movements down is where equities get a bid. And most importantly is, maybe the humans aren't bidding them, but those mathematical high-frequency volume machines that are done by machines do it, not humans, is what we're going to be looking for. And that if the bottom is going to be put in from yesterday's key reversal, is you're going to see the same kind of trade off that bottom. There is no FOMC meeting news, but the gap open down is how I get my trade management. And MMTs, the reason why I was spending time on it, I mean, the whole NYSE is gapping down. Look at that gap open down list. And you can go back to all our other pre-market live video analysis and trade management analysis. You will see the increase. So you go watch one other video, then you come over here to this timestamp, and you will see exactly what I'm talking about. And if you're in denial, hey, too bad for you. You'll get whipped around. we conclude the NYSE. We're going to get ready to rumble. I will be going through the bear bottoms, how bear volatility at the bottom sets up, and can do that for a number of days and weeks. But every bear bottom has to have an accumulative effect, an accumulation outside of all the robots that create these moves. That then the humans come in and start bargain hunting.